how do developers pick up the pace to match this enthusiasm that residential sales are showing? What's your view on this? And one unrelated question is the equity going to come in? Is more equity investments going to come into real estate, given where we are?
Yeah, I mean, let us do different things. NBFC will come to it later. There is large sums of equity capital sitting in. Maybe people like Goldman Sachs, Blackstone, or Brookfield. There are a lot of other pension funds, a lot of other sovereign funds. Plenty of capital sitting on the sidelines. And I don't think if entire money comes in, I don't think we can even consume 10% today. That's the opportunity available on the supply side of the capital. On the other hand, the market has gone through serious consolidation. There are only 20 people in the country who makes all the noise. They take care of close to about 70-80% of the market today. So for them to have the capital, NBFC need not be the only option today. Hence, for us to have the capital, we can knock at doors of people like Goldman Sachs and all that. And there is a big opportunity coming in now. For example, during this COVID, we got the second partnership from Mitsubishi. Mitsubishi has invested, as you know, with one of our projects in Chennai. They have, come with another project investment today. So these kind of large names come with large capital. So these top 20 people, I don't think they depend on NBFC. But having said that, NBFC side, there is a new opportunity which has come in the last about few quarters, is that wherever the NBFCs are stuck today, those projects are coming to us. For example, we assigned about 3 projects. There are quite a lot of other NBFCs, I don't want to give names. So they stuck with the other developers. Those projects are coming to it today. They are not in a position to come with additional funding today, but those projects are available at a throwaway price today. As we speak, there is another NBFC who has been bought out by, or being bought out by. They, opened a bouquet of assets to us with about 30% discount, 40% discount today. So that's the opportunity we are looking at now. So, and most of the senior developers are practically well positioned with respect to the cash flow. And I would say, I will not say cash rich, but definitely not cash deficit. They're in a very, very positive position today. Hence, NBFC is not going to alter the journey of real estate development the next 12 months time, at least is my view. If it comes through, it is well and good, but that's mainly was used for land acquisition, basically. Today, you don't need to go very aggressively for land acquisition today. If you want to do land acquisition, you can get this, capital raised from the senior, private equity players, and as well as, you can liquidate some of your assets. These are all the probability now. And the existing NBFC asset, if you are buying it at,
discount,
huge discount, yes, again, there is capital available today. So that's the opportunity I'm seeing now.
Okay, so Murli, 2 or 3 things you're saying. You're saying that Resi equity is starting to look, and Mitsubishi is a new name. It's not that common. So obviously, it also means new capital that's coming in. I don't know whether Naveen is on the call yet, but I think Naveen is also tied up with a Japanese capital during lockdown. Naveen, you're there?
Yes, I am.
Yeah, hi Naveen. Murli was just saying that he's tied up a deal with an equity deal with a Japanese investor. I think you've done similar. And do you think new equity capital will flow in given the positivity around residential sales at the moment?
So we are seeing that, Shobhit. Hi, everyone. On the equity side, on the residential side, there is a lot of discussion happening. We've closed one and we are actually talking to them about our second transaction. And generally, we see a lot of interest from Japan, and a lot of Japanese investors are looking at it. And also because we are in BKC for our commercial assets, we are doing a lot of transaction on lease side with a lot of Japanese conglomerates who are looking at setting up big setups in India. Also, we had a board meeting with Marubeni, who's our Japanese investor. What they feel is that where India is today is where China was 15 years back. So they have a huge view on India. And given with this COVID and the relationship with China of the world, India is the flavor to them. And these guys are very gung-ho about India and are very, very passionately looking at doing things rather than just evaluating. They are serious and they want to do and are willing to take calls.
Thank you, Naveen. I'll just bring you in, Sai. You do a lot of advisory work on the documentation side on some of these marquee deals that happen. Um, I'd imagine you'd be more busy doing commercial side of the business. Are you also seeing or people talking to you, investors, global investors talking to you on the residential strategy?
That's right, Shobhit. In fact, I'm glad you asked. I was about to jump in even before the question, but the flavor that we've been seeing in terms of investment was more debt type, pure debt type transactions with recourse, etc. But and especially during the COVID time when there was obviously a softening of prices when things started really going back up, at least we clearly started seeing inquiries for more equity type transactions, though not full equity. The only equity deal that I think I'm aware of in this space is, I think it's public, is the Rustam G1 where Keppel Land of Singapore came in for the very first time. So that was a very good example of someone taking a view on the residential sector and its fortunes going forward, despite the time during which the deal was done. So I'm hoping that's going to be the start of many of these, but we are increasingly starting to see lesser or zero recourse deals. When I say zero recourse, none of your security and the usual kind of debt attributes that are there, but which are more predicated on sales and cash flows, which hopefully will then transit to a pure equity kind of play. And secondly, to your other question, it's not the same old faces, fortunately. We are, at least I personally have seen at least three new persons who are looking at three new investors who are looking at this space for structured kind of transactions with a more equity than a debt flavor. So which is a positive thing, right?
There's very positive news, Sai, that, after a very long pause, we are starting to see equity come into residential or equity style investments come into residential. I think this will go a long way in creating the next cycle, up cycle on residential, which in my view just about started. I'm going to bring in Gautam. Gautam, just a quick question. When I spoke to investors, resi versus residential versus commercial, I think the big plus for commercial was on two accounts. One on efficiency of capital, because the tax, you were getting tax rebates. And second was this RERA issue. They were just scared of customers creating a ruckus on the RERA side and therefore some liability coming out of it. Are you seeing any change in attitude, especially on the financial efficiency of the transaction? So, Gautam, are you there?
Yeah, I'm here. Can you hear me?
Yeah, I can hear you.
Yeah. So, are you talking of financial efficiency of the transactions on the resi side? Or
on the resi side, as opposed to commercial. I mean, that is a big giveaway because this commercial side is very tax efficient for foreign investors, whereas in residential you don't get the same benefit. But is something changing there? Is something happening on that side?
Well, the only thing I heard, you must have heard in the budget, was something about resi, rental housing, right? And to my mind, it's a little too early for all of that. I think what really helped the commercial side is also the REITs. And it's, as you know, it's been only the commercial assets which have gone to the REITs. That's also helped to kind of roll over the assets and roll over the capital. And once investors see an exit option, which has played out, I think it gives a lot more confidence. To me, the next natural step would be an expansion of the REITs exit option to resi as well. But we are a bit too early in the game for that. And there will be time before that plays out. So yeah, it's great after 2008 seeing capital come in a different positive way on the resi side, and the market has matured, players have matured, and very importantly, investors have matured. Right. So I only see positivity going forward, but yeah, it's going to take some time.
Super. I'm going to, you mentioned 2008. I'm going to bring in Rahul. Rahul has been looking at the markets in his previous avatar. He's been advising people on listing. if I don't recollect, last listing was, I think, Oberoi Realty 2008-9, that genre. And since then, nothing on the resi side has come up. Is this going to change nearby? We've heard that only yesterday a draft red herring prospectus has been filed by one of the developers. Do you think there's appetite for residential-led developers and listing it in the Indian Stock Exchange?
I think, thanks, Shobhit. I think that's a great question. So, Oberoi was listed back in 2010, so around that 2009-10 genre. I think, of course, the real estate sector has undergone a sea change since then. And the associated lenders, also have taken a big knock. And of course, that's been popularized around the world. We've heard many examples, also out there. Now, I think there's an increased sensitivity amongst investors that the sector has been by and large cleaned up. There is a proper regulator who've got the teeth to correct things. Of course, we keep hearing examples of, the defaulted developers, etc. Have been systematically cleaned up from the system. So therefore, I think one of the big reasons why the real estate sector fell out of favor was the corporate governance issues, which have become extremely pertinent worldwide. Now I think fast forward to post COVID and what we have seen on the NBFC side as well as on the banking side, I think the real estate sector in our understanding is definitely finding a favor with a lot of investors. So while of course it's to comment on the IPO pipeline, etc., but clearly in our conversation, we do see increased interest on the resi side, particularly, and this of course is also reflected in my domain expertise, which is the banking sector, the housing finance companies. If you would have seen, they've also kind of bounced back, because one of the ways to play the resi space is to buy some of these housing finance companies in absence of some of the pure play options being available in the market. So it's, in our opinion, I think if there are good, credible companies with strong corporate governance and with strong visibility of the future cash flows, the projects, and importantly, the positioning they are created for themselves. And we all know the luxury got shafted. The affordable housing has taken a back seat. It's a medium ticket size kind of project. So if the positioning is also good, you might see increase demand from the global investors. So just to summarize, I think if the sector behaves itself well, you will see fair bit of secondary capital coming into the sector.
Thank you, Rahul. I'm going to just shift gears from top line to bottom line, and I'm going to bring in Naveen and Murli. I heard both of them say that they're probably going to outperform or at least be equal or outperform last year's revenue on resi sales. How about profits? In my view, the margins should have gone up given everybody's trimmed the fat. But I'm going to let Murli and Naveen speak in that sequence, saying, are we seeing increased focus on profits?
Thanks, Shobhit. This year, we would maintain the same amount of profitability compared to the previous years. But because of the market consolidation, is one aspect, the competition is coming down a lot. Practically, there is no competition today. So I expect the prices to go up because of that is one reason. The other reason is cost of capital also is becoming competitive today. That's the second one. Third one, the deals what are available today. Quite a lot of distressed deals are available today. Hence, what was available at 100 today is available at 70. That's extra delta which is available. So one side we are getting the raw material at 20-30% cheaper today. On the other hand, competition is not there. Because of that, prices are going up. Consolidation has happened. Prices are going up. Given all the circumstances, I look at next 3 years time at least, 21, 22, 22, 23, 24. I expect the margins to go up at least by 20% from what developers are operating today. That's a hope.
No, absolutely. Naveen, you want to add something there?
Two things, Shoaib, apart from what Mr. Murli spoke. One is that because we are Bombay centric, uh, developers really didn't bother on cost that much because of the sale value. And COVID has actually taught us to relook at a lot of things as to whether you need it or you don't need it, and cut the flap not only at your company level or corporate level, but even in projects. So we've seen that, when you go back on the drawing board and challenge each decision that you took initially, you've been able to cut your cost by 7-8% on the construction side itself. And that's practically, I think, each Bombay developer has been able to do that in terms of getting in more efficiency and challenging each of its thought, which they did. Apart from that, increased sales means increased cash flows, which means dependency on your bank reduces, which definitely saves your interest costs, and also interest costs is softened, which also adds to your bottom line. By and large, whatever Muli covered, I just think focus on ensuring that you do your project in far better cost and far more faster. Earlier you were doing 20 projects. Now in Bombay, we are like, let's complete the 5 that we have. So it also really adds to the bottom line, Shobhit. And as I said, you may not see profit immediately adding up, but you are at least heading to that direction, which was not the case last year before COVID, where you were really not sure where it's heading. At least the direction is on the right side. Now, whether it's 1 year or 2 years is going to be depending on efficiency and how the market remains. And
No,
above all, in Bombay, we have premium reduction that will surely help to get things moving.
super. We've obviously spoken offline, but all the time you were talking about how developers were there was diminishing profits or really no profits until sort of last year. Suddenly are going back towards a greener balance sheet. And if not this year, obviously the future is very promising. I'm going to shift gear one more time and come to you, Sai. What are some of the things that you will see or you hope? And I think Gautam touched upon it very mildly, saying he used the word reuse of money or cycle coming to an end. While we're saying property cycle is starting, I also think that REITs have proven that there's a recycling of capital, right? So whether it's Blackstone, Brookfield, they've been able to complete one full cycle in Indian real
Yes.
estate, and that's changed the transaction size. Now, I know where things are, but we've changed a lot of things on the physical side with RERA coming in, GST, etc., etc. What about things like title insurance and reps and warranty insurance? Because when we try and advise foreign investors, we spend disproportionate amount of time negotiating title and reps and warranties. Can there be any efficiency around this so that we become like any other foreign country that once you decide the commercial, you can go in and out of the deal in a month's time? What it takes right now, in my view, is between 2 and 3.5 months. Right? Can you do that?
Yeah, certainly. And on the title insurance part, I want to answer this in a slightly more expanded fashion to also include rep and warranty insurance, which is a different product. As you rightly said, I think we are seeing where funds who had invested earlier, maybe in the 5 to 7 year bracket, are now seeing exits in their assets. And this can be either in the warehousing space or in the commercial offices space, where they might either be divesting to a REIT or to another investor or other strategic player. The fundamental issue that we are facing is, as you rightly said, one of the core parts of an acquisition is really the reps and warranties and the indemnification for the past. Because if you're getting a fully priced transaction, you also need protection, right? But unfortunately, many of these funds are reaching, or have, in one case which I was just mentioning to you, is literally got only about a 1 year tail period, which is, and again, with no ability to call capital beyond a particular point, call back capital beyond a particular point. Then what do? So then what we've been seeing increasingly in transactions of late is a fairly robust amount of rep and warranty insurance policies being contracted. Title insurance, I'm not very hopeful. The last time I checked, the statistics seem to say that there were only 3 policies issued in India. But rep and warranty insurance, there's a significant amount of activity that's been going on. And 2-3 things. I think premiums have been say this from senior or in
Sai, I'm not sure whether
Sai,
I'm not sure whether other could.
premium.
Sai, can you repeat, because I think you were breaking up. So I don't know whether only I can't hear, but it could be. Now you are.
Rahul. Yeah. So was part now the insurance and we don't have right? Giving there's no pay. Loss kind of we you can keep trying.
Hello, Mr. Krishna, your audio is breaking up. Request if you can, remove your virtual backdrop or at least switch off the video so your audio would be clearer, sir.
Thank you, Ronit. In the meanwhile, maybe I'll just bring in Gautam till he's settling. Gautam, one of the issues on funding side, and you would probably be best suited to answer this. There are lots of special situation funds that are participating and AIFs, right? But one of the big issues is they can't lend or deal with partnership firms or LLPs, whether it's issuance of debentures, loans, etc. And in India, there are lots and lots of projects that are either taken up by partnership firms or LLP. Is there a solution that you guys are driving? Because I think it needs a relook at this, right? So I'm going to bring in some serious conversation here, Gautam, if you can comment on that.
Yeah, Shobhit, I think that's a very, very relevant and pertinent point, because especially in today's times, as the earlier speakers mentioned, there is a K-shaped recovery. So the players who are on the bottom end of the K are really going to need a lot of at the top end, if they have to take over the projects from others, I think will be required. And as you rightly mentioned, the LLP has come a long way in this sector in running projects. So I know there was a bit of a mixed house on whether LLPs can issue debentures, and all the more conservative views you cannot. And therefore, there would have to be legislative change or some specific clarification to enable that. I think the positive that I see is, if you would have noticed in this budget, the finance minister for the second time made a mention of saying we will let REITs borrow from overseas.
That's
REITs, as you know, are classic, which is to my mind a step further away from corporate structures as opposed to an LLP. And if this is now being permitted for trust, I think this is a good opportunity and window now to get this point across to the policymakers and regulators and say, look, very little difference between a corporation and an LP. So why don't we look at permitting LPs also issue securities and for open situations and AIs to run them as well?
Yeah, absolutely. I think all it requires really, Shobhit, as Gautam rightly said, is a simple clarification, which we are quite surprised is not forthcoming. But that will be a massive impetus to use of LLPs for these kind of financing.
Yeah, I'm sure Naveen and Murli both on this call will benefit hugely, because in many cases this becomes an impediment in consolidation. And both have sort of narrated that consolidation is a big trend. Sorry, Sai, I had to interrupt because we couldn't hear you. So you were talking about reps and warranties.
Yeah, so what I was saying was, apologies for that. So what I was saying was, really, off late, there's been a significant rush towards obtaining rep and warranty insurance in transactions. And that has really helped funds that are in exit mode and divesting assets to avoid taking a haircut on their assets simply because there's no recourse. Okay, so in other words, you have a fully priced deal where you get an exit and you don't have the hangover of liability, okay, beyond maybe a 1 year period for that two identified matters. And the cost also is very much under control, where the premium, depending on the size of the deal, we've seen of late between 0.5 to even 3 to 4%, which is clearly affordable in a deal in deal. So there's been a rush of late towards warranty insurance, which makes me a very happy person.
And we, because that basically means we speed up transactions.
That's
I'm not
correct.
sure whether Murli and Naveen have been following reps and warranty insurance, but I think it's a new thing that's come up and it's doing really well. I would like to discuss title insurance as well. Murli, I couldn't hear you. You're saying something?
Murli sir, yeah.
Go ahead.
No, Murli, you're saying something, please do.
No,
If you had
please go ahead.
No, I was just going to bring in title insurance also because I think we spend unfair amount of time negotiating good titles. We go back 30 years and then go back 30 years. And actually, that, in my view, paves way for conflicts, right? If I hadn't claimed the property, I know I can claim now. And so many fraudulent claims come up on title because we keep investigating it when we buy it, when we lend, then when we sell. How many times do you have to investigate a title? Wouldn't a title insurance really be handy? And now is the time to bring it when we've institutionalized so many other aspects of real estate, including sales and marketing with RERA. What's your view on this? And I would love to have Naveen, your view as well on this. Sai, if we can start with you and then Naveen.
Yeah. So I think the fundamental issue that, like I said earlier, and I think when the audio was lost, is title insurance in India. To my knowledge, when I was just checking the statistics, there were roughly only about 3 or 4 policies issued, and the two by HDFC or Go, etc. I think it will be a very, very fundamental. It'll be a great shift if title insurance becomes more popular. Again, for the reasons I mentioned in relation to rep and warranty insurance, which is then that you literally have uh, a lot of pain taken away from you in terms of future liability, costs, and expense of litigation and recourse. Um, However, the problem, like always with title insurance, is while it is expensive again, when you have all known issues, for instance, if there is any kind of title flow break, there is a problem in the chain, in the tree, if those are going to be complete exclusions from insurance cover, then the question is, what are you insuring?
Yeah,
Okay, because I think if you ask Mr. Murli or Naveen, they'll tell you that, listen, these are things, I know that there's nothing else that is going to come out other than what I know. So that is the perpetual debate on really the utility value of title insurance, given the kind of exclusions and the disproportionate costs that we've been seeing in some of these deals.
Naveen, you have a view on this?
Uh, I think my personal view is that title insurance may not really, I mean, at least in Bombay, my exposure is restricted to Bombay. And I don't think so from a customer lens, it actually does anything because when a customer buys, there's already a banker plus a developer who's done all the title before he's reached that stage. So I think they really don't consider that as a risk. And even developers are now smart enough because they're putting in so much of effort and money in buying a property that they really don't want to take if there are ifs and buts. From an institutional guy who's looking at buying, he may consider this as a comfort. But generally, my sense is that the kind of premium, whatever I've heard a little bit about it, and it has these exclusions, it's not really there up yet for it to become a talking point today. I think it's still a few years away.
Murli, anything on title or on reps and warranties? You've done so many transactions, you've got investors in your parent company, and hopefully at some point, I'm assuming you'll take it to the public markets. But anyways, on title and reps and warranties.
Title insurance is most important one. I mean, wish it happens at the earliest, but the current scenario in India, this week, structural reforms and Land Regulation Act, I don't think that will be real. So even insurance agencies will lose money, a lot of money. And litigation is easier to create in India. Hence, I don't see that's happening in the shorter span. But I wish something we make progress towards that. Reps and warrants is another most critical one. Developers are taking that risk of giving the reps and warrants, and the private equity investors are insisting on the reps and warrants. But developers will be able to manage quite a lot of things. So to the extent, they've been able to live with that. So, and today investors also have a clear understanding what is that they could live with that. So there's a better understanding which is coming now. That's where we are today.
Super. Rahul, one quick question, right? Whenever we talk to anybody who's talking about equities, and for the last or almost past decade and little bit more than that, all equity investors or those who play in the equity markets just hands down pushed away real estate. Has something changed there? Because in the last 1 month, we are finding that everybody is putting a buy, both on the listed and unlisted real estate, saying, guys, now's the time to buy it, both the brick and mortar side as well as equity. I know there's another company who's doing one more QIP. They did it just pre-COVID and they're doing it post-COVID. And money seems to be pouring in support of these companies. So what's going on? What are you seeing that's changed in the residential real estate?
I think great question, Shobhit. Let's take a step back, and real estate, it does represent the fundamentals of the broader economy, right? From the global investors' point of view, particularly within the emerging markets, India stands out. Just taking the audience back to September or October when COVID cases were rising, everybody thought that India, perhaps could be most affected, within the larger economies, and given the per capita that we had, or we have rather, the scope was rather quite dim for India. But here we are, the cases have been under control. The large part of the corporates have dodged the bullet. And I think the proof of the pudding is in eating, as they say. If you see the corporate NPLs for the banking sector, it has been substantially under control, which has been reflected, let's say, in the top 3 or 4 banks in the country. If you see the earnings growth potential for the broader market, it stands out within the emerging markets, growing at 25-27%. Now, clearly, I think this is important because it leads to the wage inflation for the organized employees, organized sector. The businesses come back. People who have made money in the stock market, they divert the money into real assets, and then all sort of a phenomena kind of plays out. All this while, and I was asking this question actually to Anuj about 2 days back, as to what led to this transformation of the real estate sector, particularly in the luxury segment or high mid-income segment. I think the change psychology of the home buyers is really surprised globally, all the investors, and clearly I think the sector has seen a lot of cleansing, and whatever has been left behind, as Murli was earlier alluding to, a lot of consolidation has happened. So the investors are seeing that, okay, fine, there is a latent demand in the sector, which is going to be catered by stronger guys. The financing is available. The affordability is at the best ever, levels that we have seen since 2006. So, this is, some sort of a, pardon my exaggeration, but a consumption play that comes in at a substantially attractive, valuation multiple. So if the corporate, I again go back to the corporate governance part, because ESG has been under significant focus. The balance sheets are strong, the balance sheets are clean, the intention is good, the track record is good. I think there's a lot of money sitting on the fences, which could come into some of these sectors. I'll just add one more point. If you look at the avenues of an investor, let's say 10 years back versus what it is now, both retail as well as institutional, I think it has opened up. There are today multiple avenues available to move the money around from one asset class to another asset class without much of a hurdle. and that actually could be fueling some sort of a demand recovery, which will lead to more investor interest.
Absolutely. I resound. I'm saying the customer feedback or the customer sentiment has changed everything, and they've come
Correct.
back. They've come back like how to start buying, and both at the top end and at the affordable side. We were very surprised with the way luxuries come back. The recovery was anticipated in the affordable side, but luxury very clearly surprised us. Uh, Quickly, both Sai and Gautam, has the NCLT and IBC process helped at all in the consolidation, or that is just a sort of a bystander in all of this, right? Has that also fueled what Murli and Naveen both alluded to is consolidation? Has it really helped the sector? And also in bringing up the corporate governance curve. Sai, you want to go first?
I can go that. Yeah. See, I think. Yeah, so I think I really haven't, in my experience, haven't seen the IBC and the NCLT adding any sudden impetus to transactions. Frankly, obviously there are several opportunities that have been put out in the market. In fact, I remember there was a commercial office opportunity in Delhi where there were literally 33 bidders. Including a couple of our clients. But yeah, barring a couple of those, really, Shobhit, we haven't really seen a major amount of positive because of the IBC coming into play in the real estate sector. And the second issues, I mean, there's this overall larger issue on how IBC plays out when it comes to a company with multiple assets, on whether you can only bid for one asset and then what happens to the rest of the company. Because typically a resolution plan is given in respect to the whole company and not an asset by asset basis, though there are some exceptions and one ruling of the NCLT to the contrary. So again, to that extent, we've really not seen much activity of these kind of stock projects being taken over through the IBC. So in my mind, not a massive impetus, if you ask me.
Naveen, have you taken anything through NCLT or IBC? And likewise, Murli?
We've looked at, Shobhit, we've tried to look at a lot of assets on the NCLT, but as rightly said, because of a company level plan, we really don't land up able to put the right value because you are looking at assets of that company, and given the number of companies and how real estate has not been great on corporate governance, struggle, to be honest. It's a lot.
Yeah, I thought what will come out of this was the conflict between NCLT and RERA, and which proceeds. I think in real estate that's been the problem, saying that you put things in the NCLT, but RERA is standing outside or on the sidelines, so you can't really get a clean asset like in case of hotels or other industries, where once you go into NCLT. At the end of it, you're coming out clean without any past liability. Murli, have you had any good experience there?
Not a good experience so far. We attempted taking some projects through NCLT and not been very successful. So we dropped those proposals. We are currently working on one asset level in takeover through NCLT we're working on. So far, it has been going good. So once it becomes successful, then we may gain some more confidence to look at some more projects. Currently, a bunch of projects and all that, and taking over company and all that, I doubt whether. But today's situation is not in the framework is not in conducive.
So it hasn't really worked that much. Gautam, you want to say something on this? It's your subject as well.
No, our teams have been pretty active on the NCs, even some piece on the other one. But I echo the sentiments, of the other speakers here. I don't think it's contributed too much here on the topic that we are talking about. I think the only thing which is from a policy level was again interesting to me in the budget and not directly on real estate, but the whole push towards monetization by the government. Now that could throw up opportunities of real estate also coming up as part of that as the thought develops. But I agree on the NCLT and the IBC side, not much contribution.
Good. I'm going to, there are lots of questions coming up. I have one last question, which I'm going to just ask literally everybody to speak up on, and starting with Naveen and maybe Murli, let the developers take it first, and then maybe Gautam and Rahul, and I'm going to end with Rahul speaking at the end on, is the sales velocity that we are seeing just a pent-up demand, or is it sustainable? Is the big question. And what's your view on this? Murli, starting with you. What's your view? Is the sales sustainable? Because if it does, then it means a lot going for real estate. What's your view?
It's not pent-up demand, it is sustainable. It's just the beginning. See, COVID has taught a lot of lessons. One major lesson is that, go back to your basics. Basically, Indians or savings is their mentality. They always looked at savings in the real estate or gold. So these two will be their permanent potential for them to have any asset investment. Hence, it is not the pent-up demand, it is the need for having a shelter which has come in now. In the last about 6 months, if you take a look at the first-time home buyers or big, not only first-time home buyers, the second home, third home, and all that as a security for their investment. So that has come in as a large scale today. Hence, I expect this momentum to continue for at least next 3 to 4 years time. This is not only this, coupled with various other support systems which has come from the government. A lot of things have been simplified. GST has been simplified, stamp duty concessions, and purchasing the property has been simplified. So government also, some of the state governments acted very well in the last 6 months time, and the central government support. All that has been helping in another way. Third one, supply is going to be very, very restrictive. So that's another most critical one. Supply is going to come only from few people today. Hence, I expect this demand to continue for at least next 3-4 years time is my call.
Excellent. You bring up some of the very interesting points. Naveen, you want to add something on sustenance of sales velocity?
So just to add to what he further said, like he said, there's consolidation at the industry level. Even for the purchaser, there are very few projects to look at. So sales is getting diverted to few good projects and few good developers. So sales will be there where there is progress and the brand is doing well. And there will not be any sales at projects which are having problems or the developer is having problems. So sale is also finding its which projects to chase. Over and about that, with FD rates being so low and people wanting to have security, plus interest rates of home loans being low, I think this is here to stay. Apart from whatever Murli said, which I fully agree with, but these are two things that I feel are also leading to a lot of sales. And I think here, at least for the next 18 months, sales are here to stay.
It's very interesting. You say that buyers have their own sixth sense and they're becoming much more intelligent. And there's a flight to quality, both in terms of projects and in terms of developer. And of course, interest rate environment is conducive. So I know this is not your subject, but still, I'm sure as a consumer, both you and Gautam can tell us whether you're going to buy that second or the third home if you already don't have one. Sai, I think you
can tell you, speaking for
something.
many of my colleagues, I was speaking to a couple, speaking for some of my colleagues, they've actually gotten, I know 4 of them who during the COVID time have bought apartments in Bombay. Can you believe it? So that itself is the proof of the pudding, right? And I think 2 things.
Yeah, you sitting in the heart of legality, so you know what's going on, and yet you're willing to buy it. So it's a big endorsement.
Yeah, and I think the reasons given are two basic things. One is, of course, as I think Naveen very rightly said, I think today it is really the confidence in the developer and the ability to deliver. Okay, and deliver a good product. It's not that you just dump any kind of product on the consumer. That is one. And secondly, as one of the speakers rightly said, the stamp duty reduction has been a major impetus given ticket sizes in Bombay. So I know 4 of my colleagues alone who've in the last 3 months bought apartments. So I think there's enough proof for me, frankly.
So super. I mean, I think there's been tremendous support, especially in Maharashtra, from the government as an exceptional support. I'm sure other governments are doing well as well, but Maharashtra has been outstanding. Gautam, anything from your side on the sustenance of sales? And are you also your organization is much larger? Uh, you're seeing the same sentiment in your office?
Shobhit, I'm an eternal optimist. Yeah, I agree. I think I'll just add a couple of more specific comments and maybe break this down between commercial and resi. I know your questions are primarily on resi, but as we all know, commercial was probably reaching or heading towards a bubble, at least it's where it concerned A-grade commercial. And where COVID has, I think, contributed, if I'll say so, has leveled off, the supply-demand piece, and it's got the market a bit more stable and mature. On the resi side, I think as the developers rightly mentioned, the choice for the buyer is getting limited because there are going to be a handful of developers who are going to be on the top end of the K curve. So I certainly see this demand staying. But the only caveat, we all know, real estate moves with the economy. The Indian economy is rebounding back, and I'm optimistic of that, and that's why I think the sales will also rebound and continue. But if that were to take, obviously that has repercussions, and things could move southwards again. But that would be a temporary phase.
Yeah, so you're saying ultimately there is a demand that's moving towards residential, is what I hear. And of course, Rahul, you're sitting at a 30 feet view. You're not directly involved with real estate. What's your view of both resi and office now that Gautam is thrown in office as well?
Yeah, so I think first of all, on the resi side, just speaking from the macro standpoint, I think there are solid enablers out there in the system. Of course, the interest rates are at the rock bottom levels. Even if inflation moves higher, I think there is enough slack in the system which will keep the rates low for the consumers. But of course, interest rate is never the only enabler. It is essentially the job creation and salary increases and the prospects that one sees for himself. And then while Goldman estimates 13% growth next year in GDP in real terms, fiscal 22, pretty strong number, I would say. The year outwards, I mean the year out, the prospects is needs to be seen how it plays out. So I would say beyond the next 6 to 12 months, the jury is still out there. We need to see what kind of a job creation India is able to generate and what kind of quality of jobs, we are able to see. Of course, certain micro markets, as our research team tells us, have done phenomenally well. For example, Hyderabad and Bangalore, which are seeing some, good quality job creation. Tech has bounced back pretty strongly. And India actually has moved up, multiple notches in terms of the quality curve. So that's on that. On the commercial side, there was an expectation of co-working space to do well, but the work from home is here to stay. It seems anecdotally, I'm hearing about certain multinationals cutting off a quarter or third of their workforce and permanently moving them to work from home. I think that area is yet to be seen. Apart from that, the office space, you would have already heard many multinationals from Americas are still looking to expand in India. So I think commercial, our research team is still quite office space. They are positive, and resi does look good for the good players in the near to medium term. But beyond that, it really depends on macro. So I would say the jury is still out there. I would hedge my bets there.
That's fantastic. You've kind of summarized what I wanted to say. Is that look, post-COVID, resi has surprised all of us. It seems like it's here to stay. near to medium term. Lots and lots of reasons, including customer becoming very sort of intelligent. I don't know how, but they don't look for balance sheet, but they get a sense of who's going to survive, which projects to pick up, and they're picking up really good products. And of course, the markets, the government, and the developers themselves are stepping up to make it easier for them, and perhaps not a repeat of the last decade where they all suffered at the hands of few developers around the region, which has all taught us a lesson in corporate governance. With that, I'll probably like to stop, and there's 5 minutes left in case, Ronit, there are any questions from the audience. We'll allow them to have the privilege to ask the panelists and the experts anything, Ronit. Oh, I know Gautam.
Yes, sir, I am just checking. Just a minute, sir.
Yeah. Gautam had to leave, so he's of course gone out, but the rest of us are here. While Ronit is checking, I just want to check with Naveen. You also have invested in offices in the heart of Bombay. Are you seeing any tip-offs, or is it growing? Because there's a big debate and the jury is not out, as Rahul said, whether the office demand is shrinking or is it staying put.
It's giving us a confused signal at this point of time, Shobhit, because we've done new transactions also after COVID. We've lost transactions in COVID. We've got people coming back asking to pre-terminate even in lockdown. I mean, even in their lock-in terms. So we are seeing a bunch of everything. I think it needs more time for it to settle down. But I can tell you one thing that, we have close to 120 tenants. We've spoken to all of them. Are you looking at downsizing your space? Are you looking at expansion of space? Everybody is in a status quo moment at this point of time. Nor are they looking at expanding, nor are they looking at giving up space. So it's I think it's a wait and watch state at this point of time. And there's a lot of relocation happening. A lot of companies who were in very densely populated buildings are looking at a boutique-ish building. A lot of people who were in, grade A BKC building are looking at moving to Andheri, because I think so. It's a mixed stage at this point of time. I mean, I get both kinds of signal of people saying that we will reduce space, and from there people actually saying that we will need more space because we want to spread people out.
Yeah, so you're saying different people are behaving differently.
Absolutely.
Jury is not out on offices, whether they're going to expand or shrink. I was looking at some of the announcements that have come in of the listed REITs. It seems like some amount of vacancies starting to get built up, especially where renewals are concerned. While they're doing fresh leasing, you're right. Fresh leasing is also happening, and many of the renewals are not happening. So yeah, it's a mixed bag at this point of time. Ronit, any questions? Sorry, somebody was, Rahul, you were saying something?
Yes, sir. There is one question which has come in, sir. With distress funds charging top brand name like Shapoorji at a coupon rate of 23%, what measures can the developers take towards negotiating a lower debt rate?
Murli, you want to take that question?
Not able to understand the question.
He's saying, how can we bring down the cost of capital? I think that's the question. And I think he cited a corporate who's perhaps borrowed for different reasons at that pricing. It's the wrong example, but I think what he's really saying is the last mile financing seems to be very expensive. And can that come down, or will that come down?
Yeah, it's a big challenge to at this point of time. And as you rightly said, NBFCs, not much fund available from NBFCs to lend. Hence, the scarcity of capital available on that space is creating a huge problem now. but probably once NBFC start getting good liquidity, this will come down is my view. It has to come down. Real estate cannot survive with this high cost capital today. Hence, it has to come down. So I'm sure in the next 2-3 months time, there will be some solution.
I'd just like to add there, I think the issues between those that are bankable, I think the interest rates have started to come down. I think in this particular case, there are other challenges, and hence, he's in a little bit of a, they're probably sort of buying a runway till they're able to stabilize themselves. Probably the wrong example, but yes, I agree with Murli that the last mile financing cost is still high. Until NBFC crisis is fully sorted out for real estate, at least, I don't think there's a short-term solution to that. Rahul, any other last question? Otherwise, we are nearly done. We are sharp on time. It's 3:30, and I'd like to thank our panelists. All of you, thank you very much for taking out this hour and coming together. I know we had a day job, so thank you so much for coming in and sharing your views. And thank you, CII, for putting this together. Thank you, everyone. And we'd like to end the panel now.
Thank you, so much, Shobhit, and thank you, panelists, for that excellent session.